The report is out. We're going to dive into many of the trends that you're describing in the report, the shifts in the funding.
While the high-level figure may not look attractive, there are positive signs of a growing ecosystem. We've literally experienced 3 years of record stock market activity thanks to the Magnificent Seven and AI. Fintech remains the number one interesting sector for investors, both by capital deployment and by the total number of transactions.
We created the Africa Fintech Accelerator, and it's proven to be a great success.
Corporates play such an important role because ultimately they can be a source of acquisition.
Yeah. So what are your predictions?
We predict that the total amount of capital this year will be higher than last year. We expect a doubling of venture capital investment in AI across emerging venture markets. But I say that caveat with not knowing if there's a financial crisis that could be unleashed in the next 12
Never
to 18
another
months.
Black Swan event.
Correct.
Welcome to Access Tomorrow, where we dive into the world of payments, innovation, and commerce. I'm your host, Leila Serhan. In each episode, we'll explore commerce from various angles, from the viewpoint of small business owners to the wider perspective of financial institutions. We'll uncover what drives success and explore ideas and strategies that fuel growth. This podcast is brought to you by Visa. Today, we're diving into the heartbeat of emerging venture markets. We will explore the trends that shape 2024 and predictions for 2025, as seen through the lens of MAGNiTT's flagship report. From fintech's dominance to the rise of early-stage investments, we'll uncover what these shifts mean for startups, investors, and the broader ecosystem. If you're looking for data-driven insights and actionable takeaways, this episode is for you. We're excited to welcome Philip Bahoshy to Access Tomorrow. Philip is the founder and CEO of MAGNiTT, the leading platform for data and insights on venture capital and startups across emerging markets like MENA, Africa, Southeast Asia, and Pakistan. Since launching MAGNiTT in 2016, Philip has transformed how startups and investors access vital information, enabling better decisions and fostering ecosystem growth. As a thought leader in the entrepreneurial space, Philip has built MAGNiTT as an indispensable resource for corporates, VCs, and entrepreneurs navigating those markets. Philip, welcome to the show.
Thank you very much for having me.
It's great to have you. So it's this time of the year, the report is out. I think we're going to dive into many of the trends that you're describing in the report, the shifts in the funding, which sectors are striving, which are not. But before we get started, I wanted to start maybe with something that might have caught you off guard. So when you and your team compiled the report, what was the biggest surprise?
Great question. I mean, we have a bunch of very intellectually curious people at MAGNiTT. And I let you into a little secret. Whenever we publish the report, about 2 to 3 weeks beforehand, we kind of gather around and ask the question, what is happening and why?
Yeah.
And we know in general what the perception of the media will be and what people will think. And so we need to start asking the question, why did something happen? And interestingly, when you look at the high level figure, and I'm sure we'll come on to talk about it, it's all doom and gloom, 40% reduction in funding. But the reality is that there are positive signs that are coming from the ecosystem. You saw more non-mega deal investment than the year before, which is the underlying ecosystem. The Middle East, and we cover Africa, the Middle East, and Southeast Asia, was the only region to see more deal flow year on year compared to the year before. And the Middle East was the only region that we cover that saw more international and regional investors than the year before. So when you ask me what was interesting, is that actually it's not the data points, it's that while the high level figure may not look attractive, the reality is that there are positive signs of a growing ecosystem which people should be aware about.
Yeah, and we'll come probably to the predictions for 2025 based on these positive signs. So you mentioned a 40% decline in funding, this doom and gloom number that a lot of people are talking about. But what do you see are the primary reasons behind this fall?
Yeah, and again, you have to kind of go back a few years. So I've been doing MAGNiTT for 9 years, and in that evolution from pretty much 2016 to 2020, Every year was a record year of venture capital
True.
investment. Record here, record there. COVID hit, and we go back, and for all of the challenges that COVID faced, the US economy was basically being stimulated by interest rates dropping to 0%. As a result of that, asset allocators globally are basically trying to find places to put money to work. And the region is not immune to what happens globally.
Of course.
So from a global perspective, you started seeing hedge funds, you started seeing asset managers, big VC funds, sovereign wealth funds investing in venture capital. So for the years of 2021 and 2022, globally, you saw this extremely quick acceleration of venture capital investment taking place. In an attempt to curtail inflation post all of this exuberance, interest rates started growing and they reached close to 5.5%. In that environment, you have what we call a crowding out effect
Yes.
of venture investments. And ultimately, the cost of capital goes higher. You saw that corporate bonds become more attractive. We've literally experienced 3 years of record stock market
Yeah.
activity thanks to the Magnificent Seven and AI. And so naturally, venture capital as an asset class becomes a lot more challenging than other asset classes. So globally, we saw a decline since 2022 in venture capital investment. And here in the region, we saw a similar trend, except it kind of gets delayed by 6 to 9 months. And just to answer the question specifically, late stage investment, investments that are usually $50 million plus, or what we call as mega deals, $100 million investment plus, are the ones that get the most impacted.
Yeah.
Because when you're raising that level of capital, you do it in an attempt to raise another round within 12 to 18 months or exit.
An exit, of course.
And that liquidity has not been available in the last 2 to 3 years.
Yeah.
So people forget that the aggregate number has to be all of these deals. You can have 50 and 100 $5 million deals. It's not really going to move the needle on the aggregate figure. But where the late stage drops off, you start seeing this 40% decline.
Of course.
And that has been the story across all the regions that MAGNiTT has been covering.
And how do you see this emerging markets comparing with the globe?
So interestingly, and that's another thing that came out of the report, we follow the trends of the global markets. It is more immature, shall we say, compared to the US or Europe. There are less investors. The maturity of the investors is still growing relative to the US. And we forget that when you look at the US, venture capital as an asset class come from the origins of the 1940s and 1950s,
Yes, it's true.
from silicon and then moving into software, hardware, software, etc. Here, I said in our report and in our presentations, we are now entering the second decade of the evolution of venture capital compared to the first decade, dating back to the first investors that may have been Bigo Capital or Wamda Capital. And so to characterize, the emerging markets are still developing compared to the more mature markets, but it's the highest rate of growth that we're seeing globally. And hence people are beginning to focus on the emerging market space as a new pocket of opportunities compared to what we see in the US.
So we're seeing more investors coming from outside to this emerging market.
We're seeing more disruption, more industries being disrupted, specifically in this space, more international interest in this space compared to years gone by. But scale remains the biggest challenge for all of the founders. And you take geographies like Southeast Asia that we cover, multiple geographies, Singapore being a key hub. You come to the Middle East, people talk about 17 countries in the MENA region, 350 million population. But the reality is, right now, you have the UAE and Saudi Arabia.
Yeah, it's very fragmented.
And because of the geopolitics, which I don't necessarily want to go into, people aren't scaling into the Levant and going into Africa, etc. So there's a concentration in a few key hubs of opportunities, and that you are now beginning to see this cross-pollination. Southeast Asian investors and founders coming to the Middle East, Middle East investors and founders exploring Southeast Asia, so that they can bridge wider opportunities. And that's a difference to when you look at the US. The US is a single market, large market. While it's multiple states, there's precedent that can be given from one state to the other, single language. Here, the challenges are ones of slightly more fragmentation, but herein lies the opportunities for
Yes.
many of the companies that are being born out of this part of the world.
So this is probably the good news. Other good news that you see in your report, like specific sectors, specific regions that are doing well.
Look, I mean, given that this is with Visa, as we remiss not to say that fintech remains the number one interesting sector for
Yes,
investors,
it's
both
true.
by capital deployment and by the total number of transactions. We saw that if you go to our emerging venture market report in Africa, the Middle East, and Southeast Asia, by total number of transactions, it ranks number one. If you look at it in terms of capital, only the Middle East, not MENA, e-commerce is first.
Okay.
And what happens in emerging venture is that the first industry to get disrupted historically has always been transport and logistics. And so the point-to-point pickup of goods, people, products. Then it comes on to financial services. And so we are in that wave across the emerging market space, but even mature markets like Europe and the US see fintech as the primary area for disruption in terms of investment opportunities.
So fintechs, they continue to lead. Obviously, like you're saying, this the sector in this emerging venture market. So are there particular areas in fintech that are driving this? So you talk about point-to-point money movement, but any other areas you see are interesting, are needed in the fintech sector?
So needed and where money going to is two different things. I think where money is going to, I kind of explained that point-to-point pickup of goods and point-to-point pickup of people. So you have Amazon and Souk, and then the Careem and Uber story. When it comes to fintech investment, it is pretty much the same thing, but it is payment solutions, money moving from one location to another location. Why? Because it's an identifiable problem that can be solved using technology. It is something that is extremely scalable. It is also global, because there are many payment players globally that may be interested in the region, which provides the opportunity for acquisition in the same way as we saw with transport and e-commerce. And so, not to say that there isn't investment opportunities in neobanking, you can do wealth management, there are other types of crypto solutions.
BNPL.
Exactly. Well, BNPL definitely is getting a lot of funding, but again, that's money coming from one account to another to a certain extent. So the solution there is a differentiated version. BNPL by far has seen the most amount of venture capital funding, but it tends to be this payment solution transfer that gets the most venture because it's so appealing for companies to scale and that there are clear identifiable acquirers in that space or IPO solutions.
So the exit can be easier in the fintech space, even though scalability can be a problem.
Easier, I don't like to say easier, it's more identifiable. There are clearly more players globally in these types of places than if you go into niche products or niche solutions.
Have we seen any exits in fintech in the region?
You have seen several consolidation.
Yeah.
I mean, even Tabi now acquired Tweak in Saudi Arabia for market access into Saudi. You have not seen the likes of the Uber Careem yet. I anticipate that's coming. If not, they will be the first to IPO in that space. There's a lot of conversation now in the buy now, pay later, in the fintech solution space of potential IPO listings, whether it's in the UAE or Saudi Arabia, for fintech players. But we've also seen international players coming to the region. You look at Revolut, that have now come to the region and hired someone to lead the MENA region. You've seen the likes of Checkout. There are several international players who are looking at the emerging, and I think that the Middle East really acts as a hub for the emerging venture space, that they come and set up in the UAE or in Saudi and then expand into
other markets. And I mean, the other side of the coin on fintech is obviously scalability can be difficult because regulation, licensing is completely different from a market to another. Sometimes people look at the Middle East and think that they come here And if I set up in Saudi, I'll be able to operate in Kuwait. And
No.
that's not true.
Yes.
Or in Egypt.
No.
It's absolutely not
But it's
true.
the same for all startups, to be clear. I mean, you could go and speak to the founders of Kerim. They'll tell you the regulatory challenges that they had
transportation.
in transportation. So, like,
It's true.
It's not to say that it isn't harder, having come from a finance background, the regulatory environment for fintech. But I think any founder setting up, it is not easy scaling in multi-geographical districts where there's regulation, central banks, even legal structures that are completely different by geography.
And so you mentioned this cross-pollination between Asia and the Middle East. What do you think are the synergies?
Well, number one, they're very similar in terms of demographical breakdown.
Yeah.
So if you think that Singapore is the financial and operating hub for most companies based out of Asia, it's a 5 million population. There is only so much scale you can get into from Singapore as a fintech hub.
Yeah.
And we'll talk about fintech for the purpose of the example. But when you look at the size of Indonesia, you look at the size of the Philippines, you look at Taiwan, these are the countries that companies are looking to scale into for growth. And therefore, exactly what we mentioned, it's getting over the regulatory and bureaucratic hurdles and then understanding the cultures, the nuances of the people. Look at the Middle East, same thing. UAE, 10.5 million population. It's not fully scalable for a solution to stay in the UAE. You look at Saudi, you look at Egypt, you looked at other jurisdictions, whether it's Pakistan or Turkey, but each one comes with a different regulatory mindset, some cases language, and therefore the similarities are something that you can learn from. But the opportunities are also just bringing the knowledge and the know-how, because exits is such a big issue that 1 + 1 equals potentially 2.5 from a cross-market solution than just remaining within those geographies.
And then you attract those global players, like you're saying, and more identifiable exit. So when you fintech dominating the venture markets in as you're saying in your report, when you see global players like Visa, how do you think we should contribute to this?
I think it's a great question. I mean, players like Visa can play a big role in, one, educating the market in terms of exactly what we discussed. Visa will have operations in Southeast Asia and the Middle East. Not only will they have operations, they could have potential clients who are the companies operating in both markets. They can act, I mean, if we talk about how exits is one of the biggest challenges in the region, they can act as quasi-brokers where they can do a road trip of educating founders and people from one jurisdiction into another and vice versa. And if both succeed, they both become bigger players. It's a win-win-win for all the different parties. They also have people, the breadth of expertise within a Visa means that you can be operating in marketing, you could be in business development, you can be, I'm sure you have policy people that are doing lobbying exactly with government entities. Identifying and understanding the biggest challenges that come from some of the companies in this space that can leverage the know-how and experience of a Visa is something that's extremely powerful in disrupting and changing the financial services space. But ultimately, it really depends on the corporate. You can either look at direct investing because you believe in a specific sector. You can create corporate venture capital funds that look to make multiple investments that are not off balance sheet, but in a fund structure. You can do accelerator programs where you use all of the know-how that you've just mentioned to help early stage founders get to product market fit. Or you can just build out awareness through content and maybe a Visa MAGNiTT report on the state of financial services, but that becomes a tool that can better educate the market on what's happening in this space. So I think that corporates have a very big role to play beyond just investment capital.
It's interesting because we're actually doing all three. So, and I know you're very passionate about accelerators. And I think 2 years ago, we created the Africa FinTech Accelerator. We're at our 4th cohort now, so 22 per cohort. And it's proven to be a great success. And through the accelerator, not only we're bringing VCs, but we're investing directly. And we just announced a big investment in one of the fintechs in Nigeria,
Nice.
actually, MoneyPoint. So, yeah, we're doing all three in a way or another. So it's good to have validation on our
Great.
plans for this region.
And I think corporates play such an important role because ultimately, when we talk about exits, they can be a source of acquisition.
Yeah.
And the earlier you start in the funnel, the more education you have as part of the exercise in the space and the companies. When they get to a certain point, you've already built that relationship, which is why accelerator programs are such a powerful funnel for
true.
deal flow
Yeah.
as part of the exercise.
Yeah, and we're seeing a lot of banks actually investing in fintechs.
Correct.
Either to access the technology or to have a better agility. But we're seeing now more and more of this happen. There was a bank in Pakistan that invested in a fintech in the UAE just to enable a specific use case for their bank in Pakistan.
Well, not just that. I mean, banks are obviously a separate proposition, but if you take HSBC, for instance,
Yeah.
they have acquired the SVB proposition in the UK, looking at all of the different areas of whether it be lending, corporate provisions in terms of banking, retail solutions for the employees. That's a solution that here in the region they're looking to roll out. So not only is it just investment, accelerator programs, etc., they can be a service provider for the startup and venture, let's not forget the VC side, that can help facilitate the startup ecosystem. So banks, I believe, have a crucial role in supporting venture as an asset class in emerging markets, and that's very much untapped.
Yeah. So moving on more on a regional level, away from the sectors. So country-wise, Singapore, Egypt, the UAE are emerging as leaders in terms of venture capital. Despite a 45% decline, Southeast Asia is still leading the way.
Yep.
So what do you think are the factors that have enabled countries like Singapore, UAE, and Egypt to actually establish themselves as leaders in this market?
So firstly, we go back, I mentioned that the Middle East is, the MENA region is the second decade of evolution. So it's probably in year 11. Southeast Asia, if you go back to the first investors in Southeast Asia, are probably 16 to 17 years in the evolution. So they're actually just more mature in terms of venture capital investment than the Middle East. You didn't mention Saudi. That's another huge one in terms of growth. They're 5 years in terms of maturity. But given all of the focus of Vision 2030, you see that they're accelerating at a very quick rate. And I think one of the common denominators is a government focus on innovation and venture as an asset class, in many cases as a point of diversification of the economy. Whether you look at Singapore with that 5 million people, understanding the importance of the digital economy for Asia, whether you look at Indonesia and the opportunity for disruption for a large population, you look at the UAE moving away from just purely tourism, cross sectors have really focused on digitalization. They were the first country in the world to have a minister of AI. They had the celebration of entrepreneurship here in the UAE back in 2013 to spearhead the innovation in the GCC. And in Saudi now with Vision 2030, many government initiatives to really drive the diversification away from natural resources and the digitalization of the economies, because they believe in the future development of that sector. And especially in the last 12 months, the amount of focus on AI and the competition of AI is something that's becoming more and more prevalent. We've seen that with the election of Donald Trump and the 500 million or billion Stargate project that they're launching. Now you're seeing here, whether it's in the UAE through G42, Saudi Arabia on the initiatives that they're driving, similarly in Southeast Asia. All of that to say, the common denominator tends to be a government focus project and drive towards innovation, venture as an asset class to diversify economies.
Yeah, I think in AI, a lot of investment are going into the infrastructure and building all of these data centers.
Yes.
I think those countries have the infrastructure to build those data centers, but we haven't seen really deep tech coming up, emerging in this region.
Not here. Southeast Asia, yes. So Singapore, you remember how we talked about transport and logistics, then it's into fintech. The third wave tends to be in emerging markets into deep tech.
Okay.
And so when you look ahead at Southeast Asia, you saw that government policies, they have Enterprise Singapore, they have SG Innovate, there's all of these government programs. In the mandate for Singapore as an economy, deep technology is one of the mandates that they want to drive. Now, the challenge with deep technology is it requires patient capital and it's highly infrastructure capital driven, which is kind of counterintuitive to the venture capital model, which is all about rapid scale.
Yeah.
And so again, it requires this government focus for patient capital in the infrastructure for that to be developed. Here in the region, we're currently working with a government entity to map out all AI investment. According to a global report last year, 36% of all capital globally went into AI venture investments and 18% of all deals. Here in the region, based on some very preliminary results, we're talking about 4% of capital last year was in AI. So we're working with them to try and map that out and then to work out what the opportunities are for growth in the AI sector. And even on MAGNiTT now, you can begin to filter through companies for AI, but it's still very nascent. And again, you won't see the figures that you see in the US because a typical investment path is 1 million, 5 million, 5 million, 20 million, 20 million, 50 million. You're still only seeing those very early stage investments in the AI space or deep tech space.
So it's interesting. You're talking about government intervention and the need for government to actually put these policies. But it was not like this in the US, right?
I mean,
is it a characteristic of emerging markets?
Well, I mean, I think not particularly. When you go back to the origins of Silicon Valley, it was all born out of silicon, and silicon was part of the government initiative to drive. Then as a result of that, if you look at the percentage of venture capital of GDP in the US, it's close to 1.8%. Here in the region, it's around 0.2%.
Oh, far.
Which is really far.
Yeah.
Singapore is about 2.5%. Now, again, each geography has different GDP, so it needs to be compared accordingly. When you look at the defense spend on technology in the US, it is ridiculously high. Not to say that it isn't necessarily here, but here it's still the private sector that has been the venture capital stimulants. The government, through the fund of funds, have been fueling the venture capitalists. But the direct investment from government into deep tech is something that is yet to come to fruition and is likely to happen in the years ahead. But to say that that wasn't the case in the US or Europe, a lot of government funding has potentially been for either fund of fund or LP funding or direct research and development, which then attracts venture capital investment once products have been created.
Okay. And so finishing on the regional view, and beyond the usual suspects, who are the new kids on the block?
In terms of startups?
Of countries.
Countries. Look, when you look at Africa, I think that there was an interesting story. During COVID, there was a lot of investment that was going into African geographies, and that kind of petered off when capital dried up. When you look at the hubs of, for instance, South Africa, I think South Africa is a very interesting hub for venture capital investment in terms of talent pool and opportunities for scale in Africa. When you look at the MENA region, Qatar, given the creation of the fund of fund that was done last year, we just released a report last week on Qatar's ecosystem. We've seen considerable growth, albeit at early stage. That's another key differentiator for the GCC. I still believe there's opportunities in countries like Turkey, which is one of the most fertile early stage venture ecosystems, because a lot of capital goes at angel and seed. And actually, a lot of work is done to develop the talent pool in Turkey. But then companies look to scale into Europe or other geographies. And in Southeast Asia, people are very excited about the opportunities in Taiwan. So in terms of new kids on the block, those are some of the players that will emerge in the next decade.
So countries to watch.
Countries to watch.
So you talk a lot about early stage investment, and probably those government interventions help more in the early stage investment. So early stage investment is growing. Exits are declining.
Yes.
There are not too many exits. I think you mentioned in your report it dropped by 32%.
Yeah.
And the average time to exit also dropped.
Yes.
Right? So let's look a little bit into this. So why do you think there's more focus on early stage?
going back to the whole point of the interest rate environment and etc., the cost of capital, as we said, if you can't see where the next investment round is coming from or where the exit's going to come from, naturally people get risk averse.
Yeah.
The capital dries up.
True.
Secondly, the availability of capital to make deals of 50, 100, $200 million investments, when you go back to the heydays of 21 and 22, came from international players. You saw the likes of Tiger Global,
Yeah.
Sequoia at the time, SoftBank, which was an investor in several startups here in the region. In the last 2 to 3 years, many of those entities are focusing on their home markets, on their portfolio companies, and not investing in the emerging venture space. And therefore, you have a challenge of both the supply and demand for late stage investment. So if you do have dry powder, i.e. available capital, naturally, you shift towards earlier stage where maybe valuations have stabilized. You know that an exit is going to come in 6 to 7 years, and therefore you're not worried about the volatility of 25 and 26. Your payoff comes when you hope that the economies rebound in the next cycle of evolution. And we've had a massive shift change in the founder mentality.
Yes.
We talked about everything being positive. It was scale at all costs for many years. In the last 2 to 3 years, it's all about unit economics, frugal mindset, making your money work for you, which is why we talked about companies not necessarily going to the Levant or Africa because of devaluation of currencies and challenges that come. So the mindset of the founder is to make your money work a lot harder than it potentially used to have to do back in 2019 and 20, which creates a perfect environment for an early stage investment over a late stage.
Yeah.
However, as we begin to see the exit window open up, whether that come from IPOs and or late stage investment beginning to come back as interest rates or favorable environment comes for supply of capital at late stage, we'll begin to see more IPOs, more M&A transactions taking place, and more capital going to the pre-exit slice of the funnel.
But this drop in exit, doesn't it impact investor confidence?
It does. And I mean, I'm not an investor specifically, but ultimately your payoff comes in the exit. And to be clear, exits have historically come from M&A transactions.
Yes.
So if you backward engineer who are the typical M&A solutions, either they come from global players looking to get market entry. So many may have been challenged in the economic environment that we're in and are looking to focus efforts and cash, which has become expensive in other areas. Or it comes from corporates who themselves have been through many restructuring projects over the last 2 to 3 years. Or they come from private equity, which I do think is an asset class that's very interesting.
Yeah.
But here in the region, we've been somewhat challenged with private equity. We're seeing a re-emergence of interest in private equity, but those players are few and far between compared to more mature markets like the US and Europe. And therefore, as a result, there's been few and far between M&As, but we anticipate this is going to accelerate heading into 2025.
Okay. So since you're talking about 2025, let's look ahead.
Yes.
Right? And so the venture landscape, we know, continues to evolve. You talked about the new kids on the block across the MENA, Africa, Southeast Asia. So what are your predictions?
So I think we're beginning to already see some of that come to fruition. We predict that the total amount of capital this year will be higher than last year.
Okay.
Largely driven, as we mentioned, of the return of later stage investment, even if it comes at 40, 50, $100 million investment tickets, that pre-IPO window of venture capital investment will show that come the end of year, we'll see more investment than the year before. The second is last year was very much categorized by this focus on AI.
Yeah.
And I already mentioned that we're working with this government entity to track AI investments. We expect a doubling of venture capital investment in AI across emerging venture markets compared to the year before. The third is that corridor of investment between Southeast Asia and the Middle East will strengthen. I was last week in Saudi Arabia at Super Returns. I'm going back for Leap. There's Investopia and the World Government Summit taking place now in the UAE. Many Southeast Asian VCs are coming here, and there are many trade delegation visits to Southeast Asia planned post-Ramadan. I anticipate that we'll start seeing more of those opportunities developing in 2024, 2025, whether it's through acquisition or investment. And I do think that we'll begin to see the acceleration of international investors investing in MENA-based companies in 2025 compared to last year.
So have to be in AI. This is what you're saying?
Potentially.
Potentially. Or AI
Any
is
company,
something.
but AI helps.
AI will definitely help. And from a macro perspective, do you believe the conditions that we're going to see in 2025 will help?
I mean, we had such a volatile start to
Yeah,
this
I
year
know.
that as someone who follows macroeconomics and public markets every day, if not week, I wish I could give you a perfect answer to that. Theoretically, assuming that the trajectory that we're on and interest rates in the US are predicted to come down 2 to 3 times, assuming that any tariff challenges that are going to be put in don't create inflationary pressure, then theoretically you are in an environment that is more positive than what we've seen in 24 and 23. But I say that caveat with not knowing if there's a financial crisis that could be unleashed in the next 12
Never
to 18
another
months.
Black Swan event.
Correct.
I want to shift a little bit to MAGNiTT.
Sure.
Right? And because I remember when I heard about MAGNiTT, and back it was in 2016,
Yes.
I believe. You said 9 years ago.
Yeah.
It was quite a bold move to go and try in this region, to find any data.
Yes.
Right? And people probably would say, I mean, where are you getting your data from? Are you crazy? Really, do you believe the
I
data?
still get this.
You believe the data is true? So what inspired you to do MAGNiTT?
I mean, it's a great question. So I came from the financial services, having worked at Oliver Wyman and then at Barclays for the region. And in fact, I always give the story that I always remember using Zawiya at the time for the first time.
Yes.
To try. We would have a team in London that would cover all of the different data sets, but when it came to the region, you had to use a Zawiya platform. Now, MAGNiTT's journey is a pivot, multiple pivots, but originally the problem was to try and connect entrepreneurs and investors together. But what we quickly realized was the place that we wanted to disrupt was the data and the data transparency. And the reason was that the accuracy of the data that was being put out was something that we brought into question. And in a market where there isn't regulatory bodies that you can easily pull venture capital, transactional level data, we decided to disrupt and do a better job than global players at the accuracy of information and data in the private capital space, which is what we're now focusing on. But it was born out of the lack of data, the opaqueness of data, and actually something that I'm very dear to are the reports that we publish, the simplicity of the messaging, the why and what's happening. It's very easy to get 100-page IMF, World Bank, dense reports. We really try to boil it down to the simplest format, messaging, and takeaways that our clients or the market, if we're publishing free reports, can understand for what's happening in this space.
And this is probably what I like the most about your report. It's like, it's not just giving you a number. It's telling you what's behind the number and why is why this number is there. So a lot of data insights. Any upcoming initiatives or new features from MAGNiTT that the ecosystem should look for in 2025?
Yeah, so our stated goal is to become the leading private capital data platform for emerging markets. Historically, we focused on venture capital. We're now expanding into private equity and exploring private credit as data sets to complement the already existing platform. Geographically, I think we're quite well spread for the time being. We're not looking to focus on the US or Europe, but the emerging market data proposition, I think, remains key. And the platform itself continues to evolve, where we are using automated tools to support clients better triangulate information and data. But I think the most interesting thing is to continue to deep dive into the data sets for the sectors that we're in, and then the private equity and venture capital sets that will add to complement the already existing venture capital data set.
That's amazing. And I know you speak a lot about talking about the venture market, but you were actually never funded by
We did
VC.
one round of investment.
Okay.
That's the only one that we've done. But yes, I've also learned the venture industry and what they're looking for. And data is a very powerful business, but it's a long tail business to aggregate the data. And the growth of that as a schema is extremely important, but it's very different to a high scale super growth business.
Or a tech company. Correct. Or yeah. So I think you talked a little bit about the advice you would give to maybe to startups in terms of where sectors or technologies they need to look at. What would you tell investors in 2025?
That's a great question. I don't think I'm qualified to tell investors what they should do, but I
with an investment disclaimer.
With an investment disclaimer. Look, I think that this cross-pollination opportunity is very interesting. We have several clients that are probably at later stage that don't quite realize the opportunities that exist in other markets. So I give an example. We were speaking to a client that's in Southeast Asia. We took their portfolio and identified similar companies in Africa and the Middle East to those that they have in their portfolio. Okay. So if they're coming to raise from sovereign wealth funds here in the region, the first thing that they tell you is, are you going to deploy capital in the region? And historically, the answer would be no. It'll be to go and raise in Southeast Asia. Now what they're doing is identifying opportunities for investment, either in similar companies in the markets that they're raising funds from, which can then present, as we mentioned, that merger and acquisition opportunity for a win-win, or a potential listing that can allow them to get 1 + 1 = 2.5. So to think beyond borders for opportunities of M&A is something that's particularly exciting for the next 2 to 3 years.
Okay. So we're getting to the end of our conversation, Philip. And I always end with a pivot point.
Yep.
And so looking back on your journey with MAGNiTT, what has been the most pivotal decisions you made that got MAGNiTT to where it is today?
I mean, I think MAGNiTT's pivoted probably 7 times since I started the company. So there are many pivots. But I think there were 2 key pivots. One came out of COVID. Historically, MAGNiTT had done a lot more media, news. We'd done marketing revenue, promotion. And when COVID hit, you realize very quickly that the marketing industry is very difficult. And actually, MAGNiTT as a business model should focus on the data, research, and intelligence, because regardless of when markets are up or when markets are down, people need information. And so during that period, we really doubled down on the data and research and cut a lot of the community and media side of MAGNiTT, which is why now you can subscribe to our newsletter, which is extremely popular, but it's not about funding news. It's about research, intelligence, and market insights on the private capital space. And the second thing is that we pivoted from what was an online subscription model to an enterprise SaaS solution model. We are much better at supporting our clients, whether they're governments, corporates, big tech, all the different entities similar to yourselves, by providing them a higher touch solution, an account manager, deep insights, than just come put your credit card and access information on the platform and try and support every segment of the market. So when we shifted towards that enterprise solution, we found that we were a much better product market fit than just an online subscription model. So those 2 things are really what MAGNiTT is today, an enterprise SaaS data, research, and intelligence platform for private capital.
I mean, and we're looking forward to more to come in 2025.
Inshallah.
And your predictions to come true. Philip, it was amazing to have you.
Thank you.
I think I enjoyed the conversations, and I'm sure everyone listening gained a lot of knowledge and got a little bit more excited about the emerging venture markets.
As they should be.
In this region. Thank you, Philip.
Thank you very much for having me.
Thank you. Thank you for joining us today. We're committed to providing you with fresh and bold insights from our region, so don't miss our next episode. Until then, stay informed, stay inspired, and always strive to stay ahead of tomorrow. Thank you once again for watching and listening to Access Tomorrow, brought to you by Visa.